What's up, guys? Welcome to a Mortgage Market Monday. Merry Christmas. This time of year, things kind of slow down and taper off. Go spend some time with your family and don't worry about watching silly videos of people like me on here talking mortgage market commentary. So, trying to keep this under 3 minutes, so I'm going to rapid fire a few things at you. Forbearance rates dipped to 1.67%. Well, what does that mean to you? Forbearance and foreclosures due to COVID are not going to be as big an issue as everybody thought. So, national average, they're like 95% of people making their payments on time, so we're back to a healthy, normal market when it comes to that. 835,000 houses are still in forbearance and making late payments, and the government's bailing these guys out left and right. So it's not going to be an issue like we thought it was going to be. Number 2 bullet point, government spending plans kind of watered down. They're trying to pass new legislation. They don't know what they're going to pass. Their economic growth peaked in 2021, so they're trying to figure out how they're going to manage inflation. That's going to be the key word to look out for this year. Watch inflation, see what it does. The Federal Reserve right now is trying to cool the inflation by raising interest rates. How does that make sense? I don't know. I don't quite understand it, although I've been reading a lot about it, listening to all these really smart people. It doesn't make sense to me. I think they're just, they're like pulling the puppet strings and we're just kind of going along for the ride. But watch out for inflation. I think other countries are looking at it like, hey, are we going to be buying U.S. bonds? Because U.S. bonds are what drives the mortgage interest rates. You got to watch the 10-year bond. So when the 10-year bond is healthy, it means people are buying U.S. Debts, so to speak, on a 10-year fixed period. So that's what mortgage interest rates will closely follow the 10-year yield on the 10-year Treasury bond. So keep an eye on that. They're saying the economy is not going to be as hot in 2022. They're saying it's going to be more like a 2019 economy, which, hello, I don't know if you remember, 2019 was quite healthy. Our real estate market was doing well. Everybody was on the up and up. Housing weren't inflating 20% a year, and I think we're going to go back to that. They're calling for next year a 6.5% national average inflation rate on housing. So I think that's going to be normal, right? So here in Middle Tennessee, we're always on the higher side of that. Houses increase faster because we have more people moving here. So I would say be on the lookout for 10% rise in housing prices. I think we're going to see it balance out more from a seller's market to getting back to more of a buyer's market, right? So also, interest rates are very important for you guys to keep an eye on. Right now, the rates are slowly ticking up. The past 12 months, our low was 2.75% on a conventional 30-year fixed. Our high was 3.5%. So we saw the market go up 0.75% over the past 12 months. Today, right now, interest rates on a conventional loan 30-year fixed are about 3.25%. That's the national average. You can still get government loans in the high 2s. So don't let that discourage people. Get out there and help some more people and serve our community, and it would be an honor to serve you.